Okay, traders, what's going on? Jamie Saettele here with your midweek strategy webinar. It is July 22nd, 2015. I'm only working right now I've had some screens crap out, so I'm only working with one screen at the moment, which is obviously very difficult, especially when you're doing a webinar. So what I'm going to do is I can't have this up the whole time. Obviously, hide the charts, and so that I won't be able to see questions while I'm doing what I'm talking about as far as what I want to cover. So what I'm going to do is I'm going to go through what I was a couple of things I wanted to cover anyway, specifically trading entries, like how I trade my entries, okay, as well as the general commodity crash obviously applies to commodity currencies, short-term dollar pattern, review the pound Aussie trade, why we did it, what happened, what's next, and then I will go to the questions, and then I'll take questions that way. Okay, so let's just begin. All right, so first let's go to the pound Aussie trade. We'll start with, bigger picture, okay? Go to the weekly chart here, and this chart, and it's basically the same thing I showed in Euro Aussie a couple posts back about the extended nature of the move on the weekly basis, right? So in the scans, we have weekly basis and daily basis scans, extended up, extended down. And when you see something on a weekly, you kind of take, real big notice and on high alert for a sudden and sharp reversal. So as you can see, we've only been extended to this extent on the pound Aussie exchange rate, the pound Aussie cross, 2012 for a period, okay, preceded obviously a very large decline. Even after the breakout, okay, in 2013 in June, we were very extended, and we actually saw some very violent range trading. You traded between 169 and 163 basically for 6 weeks. And then we had a big top in January 2014, which preceded a very sharp decline. And then here we are now. Okay, so that's, Exhibit A. Let's look at Exhibit B. Exhibit B we had slope resistance. So it starts with the scan, kind of an alert, and then we have long-term, uptrend slope at, two different ones. All right. Basically, you've got, a fork that has a sliding parallel that is very clean off of highs back in October 2014. In December 2014, does cut through some of these tops here, blow off top in January 2014. Finally, it's crossed through the last couple weeks, okay? Notably the closes. Obviously, this week's not done, so can't say we're cutting through the close, but we'll see what happens with the rest of the week. So we had that going for us. Then went to entry. First, we'll look at the daily. This shows the same lines basically, but when I'm waiting for something like this, like I know pound Aussie is extended on the upside, I'm waiting for an opportunity to enter that market. I wait. How would I enter it? Right? Well, I need some sort of evidence because I need to have something to trade against, right, for a stop placement. Well, in this case, we had on Monday a new high for, multi-year high and a very sharp pullback close near the lows, closed below Friday's close. Okay. We had a sharp break below the median line on Tuesday. So the idea was to basically place the entry back at the median line, okay, which has been resistance before. All right. Now, I guess you could say, in hindsight, that you could have put the entry at the sliding parallel, which caught tops back here in June, July, and then so far today. All right, but remember, we also had, and you can see that would be this right here, but we also had downtrend slope to trade on, which obviously I don't want to put a short on unless I have something downtrend slope to trade on. So we had that, and here was the up close visual of it. So the entry was triggered last night at 211.05. I actually top ticked it, and then it pulled off 137 pips within basically an hour. Came up, tagged it. So as I was going to bed last night, I said, well, I put out that chart, said pound Aussie hit resistance. Well, I expected to wake up and thought today was going to be a good day trading wise. Instead, I wake up, decide to get up to take someone to the hospital, actually. And I get up and I see the reason I didn't move the stop to break even was because of something like this happening. I didn't want to come up, tag the Confluence, and then, risk getting nicked out on the trade. So took someone to the hospital, come back. I see that we had done that, gone through this level, pulled back again, come up, pulled back again. So I'm thinking, okay, this is finally, it's finally going to work. We've survived it. Well, then 8 o'clock happened, and pound Aussie ripped higher. So look, that's, the trade setup was the setup, followed the setup, like the setup. Setup didn't work. It worked a few times, I guess, initially, you could say, but, it ultimately did not work out. So that's unfortunately happening a lot lately, and it is what it is. Go through really bad periods sometimes, but this is something to keep on the radar. Still, again, showing that weekly chart and that long-term slope and everything, it doesn't change the fact that the break above here does not change that. If we were to come back down here and close down here, maybe we'd have something to potentially do again with this trade. Okay, or give it a shot again. So we'll be taking keep it on the radar, I guess, if you will. All right, just real quick, I want to make sure, can everyone hear me? I've not had any comments or anything yet. Dale says yes. Okay, good. All right. Okay, so that was the pound Aussie review. Yeah, I'll get to the. Okay, good. I just want to make sure I've not been talking to myself. So there's a pound Aussie review, and this is the case in general across the board. Okay, with one, the strong dollar story, obviously, and that hits commodities the hardest, which obviously hits commodity currencies the hardest. Okay, and if you look at on the weekly scans, what happens to be the most extended, gains across all the currency pairs? Pound Aussie, Euro Aussie, Pound Kiwi, Euro Kiwi, Euro CAD, Pound CAD. Those are all Europe against commodity currencies. Okay. And then on a weekly basis, you got Kiwi dollar on the downside, obviously. So, the commodity crash that's underway, and you can look at Google, Google commodity crash or gold or whatever, and you're going to get a ton of articles and telling you this is why it's going to stay this way. Look, with pound Aussie, for example, which is a great proxy just for paper versus hard assets. In general, I do think it's going, it's in a bull trend and it's going to go higher still, okay? But, and what I mean by that is if I put up this, okay, 2 equal legs higher, probably we're going to 220 at some point, all right? But with where we are right here, okay, we're at a good point for a pause. And again, just a pause within this can be a really sharp move down, all right? You could fall 11 big figures from here, okay, down into support, down near, 202, 201, all right? So, this was a big downtrend, for example, right? But there were numerous, sharp, advances on the other side, okay? And this has been a sharp move up, but we're at a point indicating all the scans and everything else that if we're going to get some sort of pullback, it's probably going to happen right about now. So just that's what my thinking is on this as far as commodity currencies in general, commodities in general. Let's go through the, trade on the same point. I wanted to talk about trading entries, right? So you notice that some of the trades recently, like Euro Yen short, for example, which was right here. Okay, this was a trade we were short, right? Basically, it was triggered right here, right? We were trading on a parallel old median line, and there was a parallel right above that. If I put that right there, you can see right there. It's right there. So we were short 30.45 yesterday, Monday afternoon. Market actually ended up coming off, 70 pips from the high. So we were in the money at one point, just about 50 pips, right? So in times like these, when it's obvious that, the market's not working on my strategy, right? So what I do is I trade the entries. And I think I've kind of touched on this before, but let's say that you're trading, if you have a $50,000 account, okay, then, a position size of 1 would be 250K, all right? Position size of half would be 125K, okay? So let's say that this was a position size of 1 on Euro Yen. So if you're trading and you're short 130.45, stop is up here 135.30 initially, and you get a pullback. Market comes off, come to support, whatever, start rebounding. I'll take some of that trade off, right? Trade the entry. Okay, so I'll book some. By the way, Euro Yen coming into seemingly a little bit of resistance right here. This is super short term, obviously. Looking at 60-minute chart just goes back several days. If you're trading the pound Aussie trade last night, right, you get a market moves in your favor 130 pips within the first hour of the trade. Okay, right here was the entry. Take some off, right? As far as the tweeting stuff like that out, I mean, if I did that, I'd be going all freaking day, and it'd be crazy. So think about during times like these when it's choppy, you might want to do something like that. Of course, I bring that up now, and so if I bring that up now, the way that the things usually work is that then the market will start working on the strategies right when we start doing something different, or right when I tell you to do something slightly different. So just be aware of that, of that possibility. Okay. Other than that, the only thing to do is really minimize risk. I mean, I guess, the right thing to do probably would have been move the stop to break even in hindsight, but again, was allowing for a retest of that because of this. Confluence a little later in the day, we got it, came off. Then probably should have gone to break even, but again, I was driving people back and forth, or someone back and forth in the hospital, so I couldn't really do that. Let's look at That's the idea of trading entries, okay? Let's go over the majors. Just, kind of like to do it as a midweek thing. Charts that we looked at over the weekend, or that, I put up over the weekend on the longer term page. So Euro, we came into the weekend here. We wrote down that parallel for a few days, okay? Don't have a whole lot of confidence trading dollar in general right now, as I wrote last week. Still waiting for some clarity on the dollar, so sticking with crosses. But as far as euro is concerned, levels that do stick out to me as levels that would be tradable, if you will, basically the 110 area up here, 110.10. Of course, that confluence is today, so it's doubtful we're going to get there, but that is quite simply former support line, the underside of it, and then you've got pitchfork right here as well, the upper parallel from that fork. If we make this more of a shift, if you will, this might be, kind of where we're going to be looking at some point, for euro. Well, we're kind of on that now, aren't we? Elliott wave-wise, pattern-wise, there is very little for me to go on. Noting this is 3 waves up, noting this is 3 waves down. 3 waves down, I believe, is probably close to equal already. It would be at 107.88. We have yet to reach that level, of course. Other levels to watch. Do watch the median line from here, which is pretty close to this, to be this lower parallel down here. And that is near the trend line that extends off the March and April lows. And over basically the end of the week, it gets around 107.25, 107.30 or so. And again, that's very close to the low that you had over here at the very end of March. Okay. So I was fine trading from the long side with euro as long as we were holding these support lines over here, right? And seemingly this thing wanted to break and it would gap down, but we kept rolling back. I thought it was a good sign that the market was doing that, basically spurning off all the negative headlines each weekend, opening gap down, closing the gap higher. But the support did end up breaking. So at this point, it's looking on the downside until you basically establish a positive slope. And the first positive slope that we could have at this point would not be really until down here near, the 107 area. All right. So would not be in really buy mode for euro at this point until, again, you either get down to support or you show something bullish, right? Show, break back through old support that had become resistance potentially and becomes support again. So that's just, it's kind of a waiting game right now as far as euro is concerned. But again, pay attention to that 107 area, okay? Alrighty. Cable, pound, again, rally. Did not come into this lower parallel. Rally has failed as of last week at basically the underside of a trend line. Okay, would have been much cleaner if we would have gotten up into 157 a little earlier. Did not happen, of course. As does now, I think you kind of have to hold a constructive bias on pound as long as it's holding above yesterday's low, given today's move off of, again, this median line. Okay, so the median line going back, from the January low, the February high, and then the April low. And we've had some really good touches there, and the slope's been pretty solid at various points, providing support. Could provide resistance up here, but providing resistance up here at these highs. Okay. Ultimately, the pattern for pound, again, kind of elusive at this point, but it is adhering to positive slope right now. So would be more constructive on pound than anything, but don't really see a trade there at this point. The trade on pound, if we were to get weakness down into 53.60 right here, you could get a chance to buy this uptrend support for pound with a tight stop. In the interim, it's kind of a just a holding pattern for now. Aussie, we've been covered this last night in the post, but solid downtrend support here. A couple fibs, a couple measured levels down here. Okay, 73.60. Again, 127 retracement or 127 extension of the rally from the April low to the May high. That was 73.61. Did come into, we're actually trading right at the week open right now. 73.76 is the weekly open. 73.78 is where we're trading. 73.40 is actually the expansion. The expansion level of the range that we had in June. Okay, and that's simply mathematically the difference in price between this low and this high. Okay. 75.97, 78.48. Subtract that from 75.97 to the breakdown level, gets you 73.40. So we've come into support from a number of methods, slope as well as measured levels and Fibonacci, and market is just kind of churning down here at this point. Again, you still have resistance up at the upper parallel. If we were to get up there at some point, this week, it would intersect with, say, 75.32, which is actually the low from April. Okay, and it was also the high back here the day after the breakout on April 6th. You had a high at 75.32 as well. Okay, so still, very much a downtrend, but kind of looking for, a stronger bounce at this point up into 75.30 or so, and see what would happen there. It's difficult psychologically to trade, some extended markets, in my opinion. I don't know about you guys, but when I put out like a chart, like last night, Kelly G asking, sure, okay. So looking at see the swing update from last night. Here's the Aussie. So Aussie, basically, trading into short-term resistance. I think I put a tweet out, but Kiwi especially being at resistance, is at resistance now, so break above would be important, right? You can point out all the resistance and all the, all you want. For me, psychologically, it's difficult when I see the market trading up into resistance like this to take a short, knowing that the bigger picture charts are so broadly extended and sentiment so extreme. It's difficult for me to take this short position, 74.50, even if I'm just taking it for, down to here to 73.70, 80 pips. I have a good feeling the market's going to get down here, 73.70, right? But psychologically, it's difficult for me to take that short because I'm worried about being basically the last, the last short, the last guy to sell. So interesting. Aussie has come down into and traded around this weekly open price. Daily reversal support 73.71. We are potentially maybe trying to find some sort of a base to work higher. This would be a pretty good way to do it. If I look at the momentum, for example, on and there goes Aussie, pound Aussie, of course, it's trading lower. If I look at the momentum on this, right, maybe a little RSI sell signals at these peaks, but you can see that at the lows, we've got 4 hour, love the 4 hour charts, love 4 hour RSI, 4 hour, you can see obviously divergence, but RSI is above, it's above 35. Even at the recent lows, we're above 36, right? So again, that's one of those things to really pay attention to. Now the RSI is failing so far up here at 60, last night, but that's the highest that we've gotten up since mid-June. Okay, so we do have some, semblance of potential, basing, if you will. A breakback above 74.50 would turn things bullish for Aussie dollar until at least you'd be looking for 75.20. And guess what? That's really close to where we were looking at anyway, 75.32, right? So a little break above this level gets you 75.32, and then you might be able to get another attempt at the short side. As far as Aussie dollar is concerned, Kiwi dollar is one that, again, find it really difficult. Excuse me. To trade on the short side, even after pointing out things like being at resistance, right? And this is great resistance. You've got horizontal resistance down, up here. You've got slope here. You've got obviously the very long standing slope that's been, resistance for some time. As mentioned, though, said yesterday to watch basically for support on this sliding parallel, because it's been resistance before, it's been support, it was resistance again. It didn't quite get there a couple hours ago, but right idea. Obviously RB and Z comes here in a few hours, so kind of off the table as far as Kiwi's concerned right now. I'm not going to take a position on Kiwi in front of RB and Z, even if you're right in your technical work. You could be very wrong as far as what the market does. We've seen gaps on RB and Z time and time and time again. Fundamentally, I do think that what they're waiting for. Everyone expects a rate cut, and maybe one guy expects like a 50-point cut or something. So if everyone expects a rate cut, then if they only cut by 25, I can't imagine that Kiwi's going to get that burned. It might actually rally. But if it's 50, then yeah, maybe we get new lows. And in that case, if that happens, then you're going to have a level to watch for. Pointed out yesterday, it's basically 64.70 or so, 64.70, maybe 64.50, a little lower. You got that down here. Let's see where the line is on, because today I know it's 64.70, but let's see where it is if I go down to what would be Thursday's bar. Okay. So like 64.60 or so. Okay, something to be aware of, I guess. You do have 64 as well, which is a long-term Fibonacci confluence. I think that's on the long-term page. Yeah, so if you go all the way back to 2001, back here, the 50% retracement of that entire rally is 63.70. If you go from the financial crisis lows, March 2009, the 61.8 retracement of that move is 64.01. So, getting awfully close there. As you can see, we are on the sliding parallel. I think that the next rally in Kiwi as impossible as it is to believe that Kiwi could rally. I think the next rally probably sends us back to this median line and maybe even this one. And who knows, maybe it happens sooner than people think and it's really violent. And then the big resistance up here will be another sell, but that's in a really, really, really long time. So price-wise. Okay, so, Kiwi showing signs of life here. If it holds, we'll see. If you get new lows in RB and Z, maybe that'll be it. Something else that you might be interested in knowing. There are several different DeMark signals lining up here over the next few days. Okay, One, this is Kiwi dollar. And if you're unfamiliar with the market, simply it's a market timing guy. Uses different methods that he's come up with on his own to find, exhaustion basically. And we are going to get, after one more down day, in which the requirement would be to be below the day 2 days prior. So if we get a new low, that would satisfy it. We are going to get a buy signal, and the last buy signal is right here in December 17th, 2014. Would have worked out for a little bit. Wasn't a great buy signal, obviously, but that will, wanted to note that. On Aussie, by the way, figured I'd share this. Aussie's actually going to trigger a weekly one this week. Okay. The last weekly buy signal was actually back here in 2002, believe it or not. Okay. Last weekly sell signal was actually up here in 2011. It was a couple months before the top, but very long term, not a bad signal. Dollar yen also has a 12 count, and one more up day will give us a 13 count, so give us a sell signal on dollar yen. Last sell signal was actually a couple days, about 3 days before the top in December. US dollar, we're going to get a sell signal potentially after a couple more up days. The last one didn't work out too well. Would have been here in very early January 2015. Okay, so looking at Kiwi reminded me of that, of those potentially long-term shifting signals, if you will, for Kiwi, for Aussie, really long-term Aussie weekly chart, and dollar yen daily, US dollar daily. All right. What else do we want to look at? So I was going through the Aussie, Kiwi, dollar yen. Dollar yen has more or less responded to, kind of proposed resistance, if you will. I still think that, after this melt up, if you will, that the next tradable, decent size move is probably going to be lower, and that what happens around this line is going to end up basically giving you a good tell on the next move in dollar yen. Okay, so what I'm probably going to end up doing over the weekend at some point is trying to match up different analogs that we've got going on here or find analog for dollar yen. With the decline we've got here, which is clearly a three-wave decline, this rally, and what's next, right? Are we going to coil up again, go higher? That's a distinct possibility at this point, given where we rallied from. But next trade that could last several days in duration, probably going to be down into the 21.85, 21.50 region. That brings me to euro yen. Euro yen, look, trading between this median line, the upper parallel. I think this is where the next trade is for euro yen. We tried to catch, this in order to catch a much larger decline. Ended up with a small loss. The upper parallel is probably going to offer the next big trading opportunity in euro yen. If we get there, today, it's not going to happen today, obviously, at this point, but it would have been in line with the month opening price. If we get there tomorrow, it'll be about 36.20. All right, so that's a level to keep in mind, about 36.20. And if we were to zoom in on, on euro yen here, you would end up having two equal legs from the low at 36.25. So that might be something keep in mind, 36.25 to basically 36.40, right? Kind of the two equal legs to the month open price. Let's see what the fib is on this. 50%, 36.06, 61.8, 36.47. All right, but I'm sure that you guys are wondering what I think about the fact that this is a 5-wave advance. Well, I'm glad you asked, because what we have as far as this being a 5-wave advance is, yes, that could be wave A, this could be wave B, wave C could be going a lot higher. But as I mentioned yesterday, as far as Elliot's concerned, what I've always found difficult as far as trading with Elliot is there's always multiple interpretations, right? And there's no it's difficult to figure out which one is more likely than the other. I mean, sometimes you can very big picture look at sentiment, maybe say that this one's better than that one, or whatever, because this one's bullish and the market is extremely everyone's bullish, so probably not bullish. But in this case, just kind of go with the slope, because here there's an alternate, which is also a possibility, right? And that is, you could end up having, this could be so-called wave A, B, this could be wave C of a flat, right? There's always multiple interpretations. Another way to try to figure it out is with looking at, say, momentum. Okay, so euro yen, again, the 4-hour RSI, right? Well, here's 4-hour RSI, and you know what? If this move here, if this would have resulted in an overbought signal on 4-hour RSI, then yeah, maybe I'd be more likely to treat that as wave A and this as wave B. Okay, but that's not what happened. In fact, we had an oversold signal over here, and since then, RSI has been oscillating basically between 30 and topping before 70, right? So on the 4-hour chart, just a review of, kind of how to look at, here's a 4-hour RSI, right? So what you've got here is overbought signal, right? No longer bearish by dips, right? Dips into 40, it's bullish, right? Dips into 40, bullish. Kind of a false move here. We actually bought euro yen down here, if you remember that. Took a gain up to about up here. Did not catch the rest of it. Okay, overbought signals. Okay, you're bullish here, dip into 40. After it fails here, you're kind of wondering, then becomes bearish. Ideas to sell rallies. Okay, up here, ends up hitting slope actually. Okay, right there, slope, RSI below 70, RSI below 70. So, I'm still would be more in the bearish camp as far as euro yen is concerned. And again, you can't, it's hard not to think that you could have one heck of a, big head and shoulders pattern going on here that could launch the next big decline in euro yen. Okay. In my trading experience back in 2008, specifically, it's probably one reason why I want to be lean towards the short side in euro yen rather than the long side at this point, bigger picture. And that is, in 2008, you had the euro really start to break down, right? And the dollar was breaking out. Okay, obviously, much different situation than we have now. It was much quicker, did not last nearly as long, but after that, the big trades were in the yen crosses. In other words, the yen kind of followed, right? So the dollar broke out, risk aversion went nuts, and then the yen crosses kind of did what the dollar crosses did. We could have something similar happen here, where the big trades, the huge trades, are going to be towards yen strength, even though no one thinks it's quite possible. And you could see, huge big figure moves to the downside in euro yen. All right, so again, here is euro yen. Let's take a look, say, at a weekly chart, right? So rally from the 2000 and okay, here we go. All right, so I'll look at it this way. All right, so on the bottom you've got euro dollar, on the top you've got euro yen. Okay. So I remember having euro dollar, and you had a breakdown here in August 2008 in euro dollar, right? Triggered a double top here. Okay. Well, that ended up leading to what amounted to a much bigger trade in euro yen. Okay. So fast forward, and here we have, collapse really kind of, begins, if you want to, on a long-term scale for euro dollar, really begins here, okay, in January, as far as the technical break, if you will, January this year. So, does that lead to the next big pattern, okay? The next big decline in euro yen? I think it's a distinct possibility, and that's what I'm on the lookout for. Not to mention, let's not forget, you still have a gap here that has not been closed, okay, here from early July, all right? The longer that a gap stays, stays open, okay, the longer it stays open, basically the more likely it becomes that that's a really important occurrence in what happened. And what I mean by that is it could be a breakaway gap in which we end up falling, thousands of pips before going back and covering that. Okay, so Elliott wave wise, you could say, well, yeah, the momentum really shifted here, and this is, one or A, and this is B or two, and don't forget, we did stop at the 61.8 retracement. Okay, very close, just a couple pips above. Right, so we have retraced the right level, if you would, and the next big move on the downside might be again crosses. So, that's the really big trade that I would be paying very close attention to moving forward. There was something else I wanted to add on that euro yen chart. Oh yeah, on a weekly chart, RSI. Okay. Overbought up here, got a slight oversold down here, but look where the last rally failed. Last rally failed up here, okay? Right near 40, again, RSI range rules, right? So the same thing applies on 4-hour charts as applies on weekly charts. And the fact that we have failed up here after registering, an oversold event, albeit very slightly, indicates potential, in my opinion, for us to see a much bigger move down. Okay, look at a few other of the majors, and then I'll go to the questions. Euro Aussie, again, really this, quite similar as far as, Euro or Pound Aussie, I should say, but trend line, okay, put out plenty of charts on this recently. Trend line looking towards, the next few weeks, 44.50 or so. Beautiful confluence down there. Obviously, we're trading, very near 148 right now. 148, in fact, 148.26 is the year open. Today's high is 148.23. So, we're at a pretty important pivot. The short-term slopes have been kind of negated at this point. Not really, doing a whole lot right there at the moment. We are trading, I guess, at resistance here, but it's just drifting around. It's not a great market to trade in right now. So just kind of letting it be. And, looking towards 44.50, but how it gets there, if it's a tradable event, I have no idea. It might prove difficult. When the market goes up and hits a resistance line like it did yesterday, and, that was another one, trading an entry, right? Up here. Shorting 47.45, came up to 47.54, market fell, right, 80 pips or so, and then came right back. So, these kind of markets, it's kind of, take quick hitters, if you will. That's what I like to call them, I guess. trade the entries. You can trade the swing entries as short-term trades. Might help out. Pound, euro, pound. Hold on 1 second. Euro, pound, euro, pound, euro, pound, euro, pound. Euro, pound. All right. So euro, pound, kind of bounced a little bit from slope support. Did come up, got a much bigger bounce than I was kind of expecting at that point, because it went through, as you can see, the former low of 70.13. Next level to pay attention to right here, 70.54. Okay, and you can see the next measured level is 68.86 on the downside. All right. So as far as a trade is concerned in euro pound, wouldn't see one unless the market were to form some sort of correction upward and end up reaching 70.90, which is the month open price, in conjunction with the median line, and say at some point over the next, probably next week or even the end of the month. Okay, so don't see an idea in euro pound at the moment. Momentum wise, you are sporting weekly divergence with the low here, okay, with RSI obviously above the 30 figure. So this trend might be a bit long in the tooth, but hey, that's proved a dangerous game, hasn't it? But in any case, any sort of turn up from here with a weekly divergence and short-term bullish slope, if that were to present itself, would pique interest as always. Okay. All right, so now I got a bunch of questions. All right, so what's your view for Kiwi dollar tonight, Bernhard Brinkman? So I think I did go over that. Raj says if they don't cut, will this go up? Yeah, if they don't cut, it's going to go nuts. But I don't know about, first of all, it's not really my forte, obviously. But I know every single what economist out there expects they'll cut. So if they don't cut, obviously the Kiwi will go nuts. Let's see, Sandeep asking about pound Kiwi. I'll take a look. Then Raj asking about other trades. Yeah, so I just kind of went over that about the trading the entries, right? It's looking for the big trade, right? But we'll trade the entries. In other words, in order to be profitable, all the time, it's just really kind of impossible to do if you're just giving the swing trades all the time. But on a swing basis, I should say. But if you want to, be consistent, then yeah, you'd have to trade short term, trade the entries. Okay. As far as asking, see, how do you become profitable? If the last couple of months have been difficult, yeah, but you have to remember too, on the year, right? And there will be losing periods. Okay. You talk to any professional trader, they'll be losing years. Okay. But, most people make their money a few times out of the year on big trades. Okay, it's just the way it works. So, when you have like a January like we had, as far as being up close to 1,000 pips, that's over 50% gains on 5-to-1 leverage. That's kind of how it works. So, it's been a difficult couple months. So, thinking goes that that'll turn around as we move forward because market conditions change. Okay. Someone asking about pound Kiwi. Yes, Sandeep. All right. So pound Kiwi, I think I put out a chart the other day. on pound QE. So the first big pullback level here, Sandeep, is right here. It's the month opening price. Actually, it comes in very near this trend line, okay, which is the same as the slope. It's all slope we've been looking at. So you can go off here, off these highs, okay. You can see the channel. So the first pullback area is going to be that month open about 232 or so. And you do have this median line here, which is by no means confirmed yet, because we have not been trading around this slope at all. But you do have a trend line down here, so that would be a level to watch. Sandeep is 232. Okay, someone asking about crude oil here. Some of the majors. You remember a couple weeks ago, I guess it was last week maybe? It was 2 weeks ago. It was 2 weeks ago. It was on the 13th. Remember, because this was the deal, right? Greece deal. So after the Greece deal, so this is the equity, this is US, this is futures, okay? Here's the Greece deal right here. And the idea was, well, to fade it basically, but you're not fading equities, you're fading the idea that the world is solved, okay? So instead of shorting stocks, it talked about buying bonds. And this is that same day. This is the 13th right here. Since then, bonds have been up every day, almost. 1, 2, 3, 4, 6 out of 7 days, bonds have been higher. Okay, that's a decent move off the low. Okay, 148 basically to 153. 5 points in bonds, decent move. What have stocks done? Well, they continued to go up, and then the last 2 days they've come back, and we're getting close to back to unchanged since the Greece deal. So, I don't know if the bond market move here is trying to tell you something. I think it is, and that all is not well. Okay, and that there still is a safety bid in there, and that equities are more than likely going to eventually figure it out and catch up. Okay, very interesting how we stopped 2 days ago at the exact high, right? So continue to keep these slopes in line. Whether it's this one or this one, be quite amazed if we can't even get up to slope resistance. Don't know what the heck is holding up equity markets, but they're running on fumes. Breath is terrible. It's like literally 3 or 4 stocks holding up the entire market. Gold, obviously, huge story right now. At this median line here. Okay, also the Head and Shoulders objective, 1291 is already reached. 127 extension of the entire 2014 to 2015 rally has already been reached. So it's a big spot. If we go out to a weekly chart, continuous futures contract, you can see also that we ended up trading to the February 2010, which is the entire 2010 low. So we ended up trading basically at the lowest level since October 2009, just 2 days ago. The next level, if we continue lower, is 1062. Although if the market gets under there, if the market gets under where we are now, if we make another low below here, we're below this median line, then gold's in a really screwy position. Okay, then it's kind of like, I don't know, it might not stop for a while after that. But again, this is support. Would be looking for a bounce here. We have bounced, but would be looking for continued, support around this level. Seems to be the most hated thing in the world right now, but and then crude. Someone did ask about crude. This is futures contract. It's now September is the front month contract. Couple levels to watch actually right now, believe it or not. So here's daily reversal support for crude oil right here. Okay, March 18th close. You remember that day, March 18th? That was the Fed day. It's also the low for the entire move for crude oil. So I'm not saying the crude's not going lower longer term or anything, but I am saying that you could end up seeing a bounce from basically right here. Okay, because you have daily reversal support. You've also got a median line that could end up providing support, although we haven't, this is, again, it's not like a verified, slope to look at. If we started to get strength off of this, median line, respond to it, then I'd be more likely to follow the slopes as we move forward, right? But we don't know yet. Okie doke. All right, so with that, I think I'm going to kibosh it and get moving. I will have this up and archived ASAP. Again, talked a lot about some euro yen, which I think could be a real interesting trade, potentially. Move up into that 130, what was it, 136.25, 136.40 area potentially for big resistance, something to watch out for. With euro yen, yeah, 135.25 right now. So, one push up into resistance. It's better. It's so much better to look at on the daily chart. Let's see. So yeah, if we can get this push up into here, right, that might give us opportunity to position for a much larger move to the downside, right? I mean, you've got such a solid bear slope to work with, where you're cutting down below the lower parallel, which tells you the trend is strong to the downside, right? And sure enough, it was rejected right at the upper parallel last Monday on the 13th. Okay, so if we get another touch up there after coming below the median line, gives us an opportunity to sell it again, or try to at least. So something to watch out for. Okay, all right. So thank you all very, very much. Have a great rest of the week, and I'll have this archived up as soon as possible. Okay, all right. Thanks again. Take care.